Hey guys, Nate here, and I am with my preferred lender, Alexis Carter at City Creek Mortgage. And today we were talking just a little bit in our office about buyers and kind of what's going on in the market, and we thought it'd be cool to kind of have that open conversation with you guys. So I've got Lex here. So Lex, what are we seeing with buyers right now? Because I know that my personal expectations were that, prices had kind of leveled out a little bit here in Utah and rates started to come down, a few weeks ago, and we've seen some variables with that. But I think that we kind of, in the real estate industry, expected a little bit more of a rush to the market at this point, and we haven't quite seen that. So I kind of wanted to just chat with you and see, what are you finding success with buyers, and especially first-time home buyers right now, because it's a tough market for them to get it into. But I think the timing is really important for them to get in as soon as possible.
Which I would agree. Yes, as far as interest rates go, Feds met about a month ago. Rates have just been on a steady incline since.
Yeah.
Unfortunately, I think we all thought that that was going to be like our big break and that we'd really start seeing rates decline or start to come down and have more opportunity for more clients. So we did have kind of a big influx of people, but it was as soon as the rates started to increase, it's almost like everybody just shut back down.
Right. Yeah, and I saw that a lot, like on the listing side too, with some of my listings, they were priced appropriately, and it was interesting how the buyers at that time, about 3-4 weeks ago, did come to the realization that, hey, I have options, rates are variable right now, and so there's not a big rush. So why, in your opinion, do you think buyers should be in a rush?
Well, I mean, they should be in a rush or they should be still wanting to try to buy. There's still a lot of other options that are out there as far as buy downs. I mean, especially right now.
Okay, wait, let me stop you right there. So what are buy downs for those that don't know?
So basically buy downs it's temporary. So in a higher rate environment, when we know rates are coming down, we don't want clients to spend thousands and thousands of dollars to get a lower rate.
Right.
When, especially if we feel like they're gonna come down, they'll have the opportunity to refi, keep that money in your pocket. So the buy downs have still been super successful. There's multiple different kinds of buy downs, but the nice thing is so you lock in, it's still a fixed rate, and then whatever type of buy down you do, you might have 1 year to 2 years of potentially lower rates. That way the borrower can get into something. Sellers are still willing right now to help cover closing costs. Once again, as soon as rates start to tick back up, we're gonna be back into multiple offers and going over the amounts of, above asking, waiving appraisal and contingencies, and it'll, unfortunately, it'll just be back to, 30, 40 offers again.
Absolutely. So we have buy downs.
Yes.
What else have you seen that is working for buyers and first-time home buyers?
So, first-time home buyers, because I think the biggest thing that we have that, clients are struggling with is being able to come up with a down payment. So we've got multiple different programs that we can help out with down payment, whether they are grants that are forgivable or not forgivable.
Okay.
Or potentially second mortgage, like your Utah housing, where you can do the first and second. So then you don't have to come in with a down payment, and then you may have to come in with some closing costs or trying to get sellers to cover closing costs.
Okay. And then I heard that City Creek may be the proud distributors of a special product that I don't know that many lenders, even on the West Coast, are able to do right now.
Correct.
And from what I've heard, it's one of the best grants or even down payment assistance programs that are out there, because there's really no payback on it. So what is that one? Because that sounds amazing.
Yeah, so that's the Hoper loan.
Okay.
That's a new loan. Basically, it helps you with up to $13,000 towards your down payment. So obviously that's helping clients. But the other piece to it is, we've got on the West Coast, Utah, California, a lot of our western states, our electricity bills are just skyrocketing. And so basically what the Hoper program is it is also allowing people to put solar on their house and help offset utility bills as well to help more in savings.
And then from that, I understand that you get a tax credit up to $12,000
Yes.
for doing that solar with the Inflation Act, right?
Correct.
And so that could be a total of like $25,000.
Yeah.
So do they have to use it then for that like down payment and closing costs for their home?
They don't actually have to use that. So the $13,000, we've actually been able to utilize it in multiple different ways. Let's say somebody does have their down payment, but there's somebody who does want to put solar, they can still get up to that $13,000. Let's say they need to pay off a car loan.
Yeah.
And they owe 10 grand. They can utilize that money towards that. Or buying the rate down further, because that specific program doesn't offer any kind of buy downs. So we can utilize that money to buy their rate down.
Okay, so you just said something that I think is really important. You talked about minimizing debt prior to obtaining a mortgage with these funds. And that's something that's pretty unheard of in like the mortgage lending world, because there's a lot of regulation around that.
Right.
So it's pretty cool to be able to impact your approval and increase your credit before you go and get this amazing asset.
Correct. Yeah. I mean, obviously all the funds are given at closing, but yeah, if we need to pay off a car loan or we need to, we're doing a buy down or whatever, all that money is credited to them at the end and helps offset whether, again, it's debt, their rate, their payment.
That's awesome.
Yeah.
So it sounds a little too good to be true. And so the catch is obviously that they have to do solar,
Correct.
right?
Correct.
And so I think when people hear about this program, they're like, well, that's cool. And I don't also want to pay for solar, right? Because I think solar in the last decade has probably gotten a bad rap. As
Yes.
those homes, the first homes that got solar have been bought and sold over and over. Is there also going to be a solar loan?
No. So basically what it is so you have your down payment. Your down payment is based off of whatever the purchase price is. So if you're buying a house that's, $500,000, your down payment is based off of the $500,000. Well, then we get your solar quote. Let's say your solar quote's, 30 grand. Then that gets added to your overall loan.
Okay.
So your solar is built right into your mortgage.
It's like no different than having a pool or hot tub in the backyard.
Exactly.
Okay.
Yep.
Sweet.
Exactly. And the nice thing about that, the solar, is so many people are wanting more solar, whether it's for, electric cars, wanting to just be green. Their electric bills are just skyrocketing and they want to be able to afford things. And I mean, this is just giving people an additional option. And without all of because I think over the last several years, like you mentioned, these door-to-door salesmen that are selling these solar programs, problem is they have huge financing fees. Mm-hmm. Huge. I mean, they're like 40-50% almost.
Well, and what I don't love about that model too is they're not super involved in the real estate industry.
Correct.
And so a lot of those guys are out there giving quotes as far as like, well, if you add solar, it's going to add X amount to the value of your home when you sell. And then I'm the bad guy when I go to sell your house and I have to tell you that that's not necessarily true.
Right.
Right. And so from what I understand, this is a company that was actually more built with the intention of working with real estate professionals so that it's more of a win-win for the consumer.
Yes. Yeah. I mean, the people that we're dealing with for the Hoper program, that's who they want to deal with. They want to deal with real estate agents. They want to deal with mortgage companies. They want to take those finance companies out of the mix so that we can put solar and help people get into homes and be able to afford it.
So there's a lot of noise in social media. There's a lot of real estate and mortgage professionals out there pitching their program. So for those folks that are out there that are maybe questioning this or, it is too good to be true, why are you offering this, right? Because you're essentially, these buyers are getting $25,000 and no one's asking them to repay it. Mm-hmm. So what's in it for you or what's in it for the lender? Why are they doing this?
So the reason this program is available or is possible is because it's a nonprofit called Hope for Homeownership. FHA historically has higher default rates.
Okay.
Because it's kind of geared towards people that are first-time home buyers. Mm-hmm. So a lot of times what happens is, any type of life event, someone gets divorced, they lose a job, they have a medical emergency, any number of other things. Obviously, those are just to name a few.
Yeah.
But they could potentially default because they just put whatever they did have in savings for their down payment.
Yeah.
Now there's nothing left.
Yep.
So where this offers that up to $13,000, that helps people, that's great. and then also the tax credit that they would get when they file taxes come, April of next year, then even if they didn't have the money for an original down payment, they still get the tax credit. So it's just helping them out.
So it's really not even a grant or down payment assistance of any kind. It's just someone writing you a check.
It's through a research company. It's basically they issue you a 1099. It is up to the $13,000, which is also why it can be used for other things than just down payment.
I understand that it's a research program then. So what do they have to do to be a part of that?
So basically, they're going to have a 6 to 8 educational course that they have to take. Their credit will be a soft monitor will be put on their credit for the first 3 years. Doesn't affect credit scores.
I was going to ask.
It's like a lot of, most things, your credit company, your Norton, exactly. That's just a credit monitoring. So it's not like it affects your credit or anything like that. And the last requirement is that they have one class that they have to take, basically like a homeownership financial class. And then they have to respond to just random surveys that are sent off to them.
Okay.
And that's it.
So basically what we should have learned in high school anyway?
Right.
Adulting?
Exactly.
Cool. Well, thank you. It sounds like there's a lot of options for people that are looking, and it sounds like a lot of our buyers are on the fence or deciding to wait because mindset. Because there's really logical solutions for most people. We just have to find which one fits, right?
Correct.
I know working with buyers, I've had some say, I'll look at buying when rates are in the 5s. But from this conversation, it sounds like with buy downs, you could achieve something in the high 5s today.
Absolutely. Possibly even, depending on the buy downs, high 4s to high 5s with a 2-1 buy down.
Yeah. And then, my people know I don't talk politics, but we obviously have the election going on, and a lot of buyers and sellers are wanting to wait to see what the election does. And we know, looking at previous elections, that nothing drastically changes, right? So what we do know about waiting is that rates are going to slowly come down, and that's going to accelerate the demand for housing and the pricing.
Absolutely.
So there is benefits to shopping now while no one else is. And then the third thing I've heard probably the most is, well, I can't buy. And that's more of from where they think their financial health score is. And so what if someone's in that position, what is the next step to find out if they really truly can or cannot, or create a plan so that they can in the future?
Yeah, absolutely. So basically 620 is specifically for the Hoper loan 620, but really for credit score.
Okay.
But in general, 620 is kind of a baseline. Obviously we can do some stuff regular FHA lower than that, but I would just say 620 is kind of the main minimum score that we need. So if someone isn't sure, if they're unsure of what their credit score is, or they know that their credit score is lower, we work with clients all the time with both, we've got rescore options for them, and we work closely with a credit repair company that if it's beyond an LO scope to just kind of look at credit, we can send them to a credit company, and we've had great results. Sometimes it's a month or two.
Yeah.
Sometimes it takes a little bit longer, but it's an option.
Yeah.
And it helps people get into homes.
Totally. Well, thank you so much. I'm actually really excited because even as a real estate professional, it's important to know what options are out there. And
Absolutely.
we have to get creative right now to help out all of our clients. So if you or someone that you care about, your young people in your life that you're worried about, will they ever be able to afford a home of their own? Give Lex or I a call, and of course her information and all of my information is on the page here and at natesassyrealestate.com, where you can actually connect with Lex and do an online application too.
Perfect.
So, thanks everyone.